Why did you decide to do a dual listing? Did it have anything to do with the U.S. and China tensions?
Well, I think having a listing venue closer to home is always in our strategy. I think as a China consumer brand, I think we want to have our customers ultimately be our shareholders as well. So coming to Hong Kong gives an opportunity to achieve that goal.
Some Chinese companies listed in the U.S., though, are hedging their bets, I guess, or hedging against any kind of possible delisting from U.S. exchanges. And now it seems like there's this newfound pressure from Chinese regulators when it comes to data security, data privacy. To what extent do you think this DD probe is only going to speed up more Chinese companies to come back home and list?
Well, I think overall the regulatory environment is becoming more and more focused on the softer side now. You know, the data side, the privacy side, the national security side. Those were not probably focused as much. But I think it's something we anticipate because we see the global regulatory environment gets tighter and tighter. It's just not in China. The data privacy, data security is a big topic in Europe. That's why we're building up an effort there. In the U.S. too, I think people focus very seriously on these issues. So I think as a company that operates globally, you have to really be prepared to face and to address all these issues and its regulatory oversight.
Let's talk about the competition. Tesla seems to have run into some issues in China, whether it's recalls of nearly all its vehicles in China, the software issues. Does the timing seem right now for XPeng to build your war chest and gain some ground?
Last year, we saw Tesla lowered prices on their product several times, and people asking us, okay, whether that will impact XPeng because we directly compete with Tesla on our models. But the result is actually we both thrived. We both grown quite well and tremendously expanded the pie and market share for China. So I think ultimately having a good competition and will strengthen yourself. And I think Tesla is a tremendously powerful brand. It has great technologies and products. So we think they still continue to kind of do well in China. But whether they will have the dominant share like they had before, that's probably something we'll watch. That will probably be difficult to maintain, I think.
It seems like many companies are also trying to raise money, raise capital among the EV space right now. How does this all bleed into the industry, do you think?
Well, I think it will means that the catalyst for converting from ICE to EV will be even greater. There will be more players coming up with better, cooler looking products, better infrastructure be built by the EV makers as well as the third-party participants of the industry. And at the same time, there will be a lot more advanced technology. The advancement will be faster. So I think the investments into this sector will generate higher growth and expand the pie for everybody.
Are you still on track to break even in 2023?
Well, I think our investment phase is going to be in the next 2 years. So I think that will naturally lead us to the end of 23, early 24 to look for potential break-even point.
What do you see when it comes to your outlook of the EV market? It seems like Europe is seeing quite a bit of momentum that's building here when it comes to EV penetration. Do you think that China can still be the leader in terms of the largest EV market?
I believe China will be the largest EV market because unlike markets in the past, which is really pushed by the government incentives and subsidies, I really see a consumer interest in EV products, more specifically smart EV products in China.